o'clock, so just before I wrap things up here on the desk, just a quick review of the day and some of the major highlights. And as you can see, US indices still remaining pretty firm on the day. However, there is some quite clear underperformance in the Nasdaq, that being a byproduct of the weaker response to the earnings report from Alphabet or Google from last night. The other components, though, that have come out, particularly kind of Dow related and also S&P, which has helped those indices briefly earlier today hit fresh all-time highs. Just to give you a kind of a wrap-up, McDonald's, their US comparable sales are above expectations. GM positive after their earnings. 3M boosted the lower end of their EPS view, as did Caterpillar, lifting their forecast. Biogen did the same. DuPont raised their sales estimates. So earnings season, which in terms of percentage of beats against Wall Street estimates was already above the 5-year average, just continues to remain overall strong. Again, the one kind of slight negative had been Alphabet, as I mentioned. But looking at the S&P here, just continuing to edge slowly higher. And obviously, just looking at this on a daily continuation, you know, it's uncharted territory here on the upside. We are breaking above what has been levels never seen before. So the Trump initiation, if you like, somewhat taken over by positive economic developments. Granted, US economic data has weakened a touch, and probably from a monetary play, that's been a little bit of a key to lifting these US indices, because if inflation is starting to petering off, as we saw 2 Fridays ago in the US, and weaker consumer spending, well, maybe the Fed will find it a little hard to remain so hawkish in this kind of, although they'll hike possibly in December to fulfill their commitment to 3 hikes this year, maybe it's the period thereafter that's going to be exceptionally gradual, which is a theme that's helping this equity market. And you know, you kind of hear that terminology of a Goldilocks scenario, kind of low interest rate normalization process coupled with improving economic overall global performance, and certainly that has been the case in European data. What has seen the euro currency break a significant level earlier, just looking on the 30-minute candlesticks, we obviously broke that high that was in play in resistance from yesterday's session, the end of last week. So we convincingly have broken above 17 handle all the way up to a run at R2 today before coming back down below the figure. But obviously on a daily continuation chart, if you start broadening this out, just to give you some perspective, let me just remove some of these lines. There was a key levels of resistance that were in play, particularly I guess we're looking at the summer of 2015. We just briefly managed to get above that. And so the highest levels we've really traded here at the high of the day, since you'd have to go back to right at the beginning of 2015. Obviously, economic sentiment in Europe's been pretty positive. You've had optimism reflected in ECB's commentary and Mario Draghi in his press conference. And the latest piece of economic data, of course, this morning was German IFO. Now, IFO, important, it's one of the main soft indicators that come out of the biggest economy in Europe, Germany. A survey of 7,000 companies across a variety of different sectors, asking them about what's the business climate, the current situation, and the forward-looking sentiment over the next 6-month period. And actually what we've seen is on the 12-month, you can see here a really nice chart showing improving confidence of German companies, which is ultimately critical for kind of future expectation values. But if you start maxing this chart out, you'll see that actually these are all-time highs. And in fact, the survey for IFO only started being gathered in 1991, and this is the highest it's ever been. And so strong data giving arguably more validity to the argument for Eurozone officials to be correct in their assumption to be more optimistic about the economic prospects going forward. And so Euro strength comparative to, I would say, slightly unsteady US economic data, particularly the focus on slight easing of inflation away from target. This obviously coupled in with political uncertainty, Trump remaining in the news, of the broadening of scandals that we had from last week, to involvement with the Russians, to Donald Trump Jr., you name it. there's obviously still that inherent risk there. And so dollar has continued to weaken generally, and is coming in stark contrast to the euro, and hence that divergence fueling the price of the pair. As I say, overall though, after hitting that point on the high, intraday at 117.46 in the euro future, we have come back quite substantially. The pound remains pretty flat. Overall, we did have a breach of very briefly 131 after the break of yesterday afternoon's high, but again we've come back slightly as the dollar's steadied. The equity positive sentiment in the US though has meant that the yen is weaker, gold, albeit off its lows, having found some support earlier in the morning around S1, or is this S2? Let me just have a look at or S2. So weaker gold, weaker yen, just reflective of some risk on sentiment, and also helping the equity space today and just generally appetite has been oil prices. Not really been just checking with the guys as I'd stepped off the desk for a short while, but there doesn't appear to be anything new fundamentally other than the news that circulated yesterday, which was talking about the Saudi Arabian kind of 1 million cut downward in their amount of oil that they're exporting to now, I think it was 6.6 million. So that being a bullish factor, that materialized from the OPEC non-OPEC meeting in St. Petersburg yesterday. Prices rose, and they've just added to that even further today. We broke above 47. You can see that momentarily acted as a bit of resistance before the eventual break through R1, R2 on the day, and then we shot all the way up to actually 47.74, where the price has found some resistance. Has a reason for why it's kind of found a natural point at those levels. If we start looking more broader to the market move, well, this is a daily continuation chart. There was a big level there from what we had on Thursday last week. We obviously just got circled here what we broke from initial volatility at the beginning of July, and so we put us back at the levels now we've not seen since the fairly sizable drop that we had back on the 7th of June. So $48, we're only 20 cents away from that now. And obviously from an oil trading point of view, you've got your API crude oil inventories coming out as per normal later on this evening, 9:30. I'd be monitoring Twitter to capture that data the quickest, because it's only available to subscribers to the American Petroleum Institute. And so unless you have that subscription, which is paid for, then usually Twitter, it circulates pretty quickly from the major news wires and so on. Okay, quick roundup then of the calendar for tomorrow. Let's have a quick look at things. And tomorrow's session is interesting for the fact that, of course, we know we've got the headline kind of event of the week, which is the FOMC meeting. Just to let the guys at home know, I will be staying late to cover that. Remember, it is just purely the statement and decision. There is no summary of economic projections and no press conference of Janet Yellen. Looking at the overnight session, you've got inflation figures coming out of Australia, so worth noting that for the Aussie currency. That's going to come out London time about 2:30 a.m. And then going through into the European morning, you've got what could be quite interesting here, UK GDP. For the second quarter, we're expecting a mild upward revision to 0.3 from 0.2%. You've also got mortgage approvals, which just given, I mean, from the broadsheets, you've probably been reading a lot about the UK housing market, where prices in London, which have typically outperformed substantially over several years, are seeing some of their first declines that we've had in a long period of time. And with savings rates in the UK at pretty much record lows, wage growth far being superseded by higher prices, you know, are people willing to step in and start purchasing mortgages at this point? This could be quite an interesting piece of information. The GDP will probably outweigh though in focus. Going into the afternoon, some housing data, new home sales. We are looking out for the crude oil inventory numbers. They'll come at a regular time at 3:30. Obviously, using the APIs released tonight as your benchmark for that. You do have an ECB speaker as well, ECB's Lautenschlager, speaking at a book presentation. Nonetheless, though, she is part, Sabine Lautenschlager, of the executive board on the ECB. And so just be mindful of that at the cash close tomorrow. And then ultimately, the main kind of event, if you like, will be the FOMC. That'll be a one and done event, so between really 7 and 7:30 the market will digest that immediately. As I said, no press conference or anything thereafter. Okay guys, hopefully that's a wrap for today. Any of you sticking around for the rest of the evening, have a good one and have a good evening, and I will catch you guys tomorrow morning. Thank you very much.